Denison Mines is currently trading at $2.85, a gain of 1.42% on the day. The stock is near its 52-week high of $2.97, reflecting a strong uptrend in the uranium sector. While many investors are focused on the rising spot price of uranium, the real story behind Denison's recent strength lies in the de-risking of its flagship Wheeler River project and the growing institutional appetite for pure-play uranium developers in politically stable jurisdictions. The market expectation is that a rising uranium price will lift all boats in the sector. The reality, however, is that the sophisticated capital is flowing towards companies with advanced, high-grade projects in Tier 1 jurisdictions like Canada, and Denison is at the top of that list. This is not just a commodity play, it's a strategic investment in future energy security. Many retail investors, perhaps using platforms like Robinhood for their online investing, see the ticker DNN and think of it as a leveraged bet on the uranium spot price. They're not entirely wrong, but they're missing the bigger picture. The nuances of in-situ recovery mining, the complexities of navigating the Canadian regulatory environment, and the strategic importance of the Athabasca Basin are what truly drive Denison's long-term value. This is the kind of insight that sophisticated investors using platforms like Interactive Brokers or Fidelity Wealth Management are focused on. They're looking beyond the daily fluctuations of the uranium spot price and are instead analyzing the long-term supply and demand fundamentals of the nuclear fuel cycle. The stock has seen significant volatility in recent months, with a 52-week range of $1.08 to $2.97. This volatility is characteristic of the uranium sector, which is known for its boom and bust cycles. However, the recent uptrend has been supported by strong trading volumes, suggesting that there is real conviction behind the move. Institutional ownership in Denison is a healthy 51.8%, with major players like Alps Advisors, Van Eck Associates, and Marai Asset Global Investments holding significant positions. This institutional backing provides a level of stability to the stock and is a vote of confidence in the company's long-term prospects. For those considering a self-investing strategy, it's crucial to look at the flow of institutional capital as a key indicator of a company's health. Many online investment platforms, such as SoFi Invest, offer tools to track institutional ownership, and this is a data point that should not be overlooked. The recent earnings report for the second quarter of 2025 was a significant beat, with Denison posting an EPS of 0.01 cents, compared to analyst expectations of a loss. This positive surprise was a key catalyst for the stock's recent rally, and demonstrated the company's ability to manage costs and advance its projects even in a challenging macroeconomic environment. While the company is not yet profitable on a consistent basis, the earnings beat was a positive sign that it is moving in the right direction. The next earnings report, scheduled for November 6, 2025, will be closely watched by the market for further signs of progress. The company's financial health is a key consideration for any investor, and those using a Fidelity individual brokerage account or a Schwab Intelligent portfolio should pay close attention to the company's balance sheet and cash flow statement. Denison Mines is a uranium exploration and development company with a focus on the Athabasca Basin region of northern Saskatchewan, Canada. The Athabasca Basin is home to some of the world's largest and highest-grade uranium deposits, and Denison has a dominant land position in the region. The company's flagship project is the Wheeler River project, which is the largest undeveloped high-grade uranium project in the eastern Athabasca Basin. The project is a joint venture, with Denison holding a 95% interest. The Wheeler River project is unique in that it is designed to be an in-situ recovery mine. In-situ mining is a low-cost and environmentally friendly method of uranium extraction that involves dissolving the uranium in place and then pumping it to the surface. This method avoids the need for large open-pit or underground mines and significantly reduces the environmental footprint of the operation. The company has made significant progress in advancing the Wheeler River project through the permitting and feasibility stages. The project has received strong support from local indigenous communities and is well positioned to become a major source of uranium for the global nuclear industry. The recent closing of a U.S. $345 million convertible senior notes offering provides Denison with the financial flexibility to continue advancing the Wheeler River project towards a production decision. This financing was a major de-risking event for the company and was a key factor in the stock's recent outperformance. Investors looking for investment help or considering different investing sites should look at the specifics of a company's flagship projects as a primary driver of long-term value. The future outlook for Denison Mines is inextricably linked to the future of nuclear energy. After years of being out of favor, nuclear energy is making a comeback as the world looks for clean and reliable sources of energy to combat climate change and ensure energy security. The recent geopolitical turmoil has highlighted the risks of relying on fossil fuels from unstable regions of the world, and this has led to a renewed interest in nuclear power. The World Nuclear Association forecasts that uranium demand for nuclear power will rise by 28% by 2030 and more than double by 2040. This is a significant tailwind for the uranium sector and for companies like Denison that are well positioned to meet this growing demand. The shift towards smaller modular reactors, SMRs, is also a positive development for the uranium market. SMRs are expected to be a key technology in the decarbonization of the global economy, and they will require a significant amount of uranium to fuel them. Comment below on whether you believe the widespread adoption of SMRs will be a significant catalyst for the uranium market in the coming decade. The geopolitical landscape is also a key factor for the uranium market. Sanctions on Russia, a major supplier of enriched uranium, have created a supply shock in the market and have led to a bifurcation of the market, with Western-aligned uranium commanding a premium. This has created a significant opportunity for companies like Denison that operate in politically stable jurisdictions like Canada. The designation of uranium as a critical mineral by many Western governments is also a positive development, as it is likely to lead to expedited permitting and financial incentives for the development of a domestic nuclear fuel supply chain. Despite the positive outlook, there are still risks that investors need to be aware of. The price of uranium is notoriously volatile, and a sharp decline in the spot price would have a negative impact on Denison stock. The company is also exposed to project development risks, and any delays or cost overruns at the Wheeler River project could have a negative impact on the stock. Regulatory risk is another factor to consider, as the uranium mining industry is heavily regulated, and any changes to the regulatory environment could have a significant impact on the company's operations. For those using a Robinhood stock trading app, it is easy to get caught up in the daily price movements, but it is important to remember that investing in a pre-production mining company like Denison is a long-term proposition. The potential rewards are significant, but so are the risks. Interactive Brokers, with its advanced trading platform, allows for more sophisticated risk management strategies, which can be beneficial when investing in a volatile sector like uranium. In conclusion, Denison Mines is a compelling investment for those who are bullish on the future of nuclear energy and the uranium market. The company has a world-class asset in the Wheeler River project, a strong management team, and a healthy balance sheet. The stock is a pure play on the uranium theme and offers significant upside potential as the company advances its flagship project towards production. However, investors need to be aware of the risks and be prepared for volatility along the way. The expectation of a rising uranium price is the simple narrative, but the reality is that Denison's value is being driven by the de-risking of its assets, the growing institutional demand for secure and stable sources of uranium, and the broader renaissance in the nuclear energy sector. This is a complex and multifaceted story, and those who take the time to understand the details are the ones who will be best positioned to profit from this long-term trend. The content shared here is for educational purposes only and should not be considered financial advice. Always consult with a qualified financial advisor before making any investment decisions. If you found this helpful, please like, comment, and share to support the community.